Welcome to the Nadex Application and Strategy webinar series presented by Daryl Martin from ApexInvesting.com. Today we're going to talk about the pound dollar spot Forex contract specs. We're also going to go into the Nadex spread pound dollar contract specs and basics and the Nadex binary pound dollar contract specs and basics. The Nadex pound dollar spreads and Nadex pound dollar binaries are derivatives of the spot Forex pound dollar. GBP or pound, also known as sterling or also known as cable, because in the 19th century the pound exchange rates were delivered by undersea telegraph cable from London. And then USD is for the United States dollar, also known as the greenback. A derivative is simply an instrument where the price is derived from something else, just like a mortgage is derived from a house. It is helpful to understand the basics of the underlying instrument itself that the product on Nadex is derived from when trading a derivative. One of the great things about Nadex is you don't have to deal with all the complicated currency conversion, but we're going to go over it just so you are familiar with how it works. FX, Forex, or foreign exchange, they're all interchangeable, is an important thing. If you travel to another country, then you're exchanging your currency for another one. And it's important to know the FX rate so you can price the value of something in the currency that you're familiar with. If you buy something online priced in a different currency, like pound, then you'll pay the appropriate dollars to pay the equivalent in pounds that the item is priced at. In trading, you can use leverage to trade the change in currency fluctuations in their value in relation to each other. The pound dollar, the way it works is if you buy the pound dollar, you're saying that the pound will go up in relation to the value of the dollar. It could also be said that the dollar is going to go down in relation to the pound. Now, if you sell the pound dollar, you're saying the pound will go down in relation to the value of the dollar, or you could be saying that the dollar's value will go up in relation to the value of the pound. The first part of the pair, pound, is the base currency. As when you place a trade, you're placing a trade to buy or sell the number of units of this currency. So if you buy 10,000, which is also known as a mini lot, of pound dollar, you're buying 10,000 pounds. If you sell 10,000, you're selling 10,000 pounds. The second part of the pair, USD, is the quote currency, as this is the currency you're exchanging, giving or receiving for the base pair. Hence the term foreign exchange, also known as Forex or FX. The term of the quote, FX pair, is how much of the quote currency it takes to purchase 1 unit of the base currency. So if the pound dollar is quoting at 1.5600, that means it takes $1.56 in US dollars to buy 1 pound. To know how many dollars you would get for 1 pound, simply divide 1 by the quote. So 1 divided by 1.56, and you'd get 64 cents for 1 pound. The pound dollar quotes in what's called pips. If you trade stocks, you're used to cents. If you trade futures, you're used to ticks. But it quotes in what FX traders call it pips. And that's the last digit of the quote, the 4th decimal place. And the minimum increment the quote can move in is 0.001, so up or down 0.001. Occasionally you'll see some platforms that may quote to the 5th decimal place as well. But to keep things simple, we'll talk about the 4th decimal place being the pip. On a mini lot, 10,000 units of the base currency, 1 pip is worth $1. So a move from 0.001 to 0.002 is a move worth $1. There's no limit moves you have to worry about in currency. One thing you do need to be aware of is what's called spot carry, or interest rate or swap rate. Interest is added to or deducted from your account each day at the rollover time set by the broker. Some brokers will also enter the price and actually adjust your original entry price daily to account for the difference in interest between the two countries' interest rates. Margin is the amount of money you must deposit to trade a position. So let's look at it. A quote of pound dollar spot FX currently quoting at, we'll say, 1.5651. Well, a mini lot is 10,000 units of the base currency, which is pounds. The value of 10,000 pounds in the quote currency, being dollars, is 15,651, or 10,000 times 1.5651. So if the quote is 1.5651 and you're getting 10,000 pounds, In the United States, you usually can get 50 to 1 leverage. So 1.5651 times 10,000 divided by 50 would mean you'd have to put $313 in margin. Now, if we divide 313 by the quote of 1.5650 or 51, we're going to get 200 pounds, which is 1/50th of 10,000, hence the 50 to 1 leverage. The margin will increase if the pound dollar if the quote increases. The margin will decrease if the pound dollar quote falls. In addition, the profit or loss is added and deducted from your live account. In many cases, this provides leverage, such as controlling 10,000 units of pounds with only $313, giving you a 50 to 1 leverage. However, a margin call can occur when your balance drops below the margin requirement and the position is shut down or a demand for additional deposit is made by the broker. This can be especially dangerous during news announcements, between close and open, and especially over the weekend. Spot Forex rates for lots and mini-lot contracts are derived from the exchange rate of the two Forex pairs. The Nadex pound-dollar spread is also a derivative. It's derived from something else. The price is derived from the spot Forex contract itself. Now, one thing to understand is that Nadex follows spot Forex, not futures Forex. So you want to look at the spot Forex chart, not a futures and not an ETF Forex chart, when analyzing the underlying chart when trading Nadex. Nadex provides underlying Forex charts in its platform under the Finder on the left side. You can see it over here under Finder. Simply click on the underlying, then currencies, then spot. Click on spot rates, and they'll appear right here. And then you can click on any of the chart buttons and actually look at the FX charts inside the Nadex platform. Since spot is over the counter, Nadex is able to provide you charts for this. They're not able to provide charts of the direct underlying for commodities and futures. Nadex pound-dollar spreads allow you to trade the spot pound-dollar with no complicated FX conversion formulas, with a contract that trades similar to the underlying, using less money, using limited risk, as your risk can never increase as your margin is your maximum risk, and with no fear of being stopped out by a market spike, as you have until expiration of the spread to be correct about price movement and direction. Also, you have no fear of a margin call because your risk is capped, as all trades and their risk are fully collateralized, so you'll never receive a margin call and therefore never lose more than what is in your account. And you have no fear of having to deal with carry interest. Nadex pound-dollar spreads tick in 0.0001, just like spot Forex. Each tick on a pound-dollar Nadex spread is worth $1, just like one tick or pip on a mini-lot, 10,000 units of spot Forex. Since both the pound-dollar Nadex spread and the pound-dollar spot Forex pair have a tick-pip value of $1, then a one tick or pip change in a Nadex spread value has the same value as a one tick or pip change in the value in the spot Forex. So let's look at an example if we bought the pound-dollar spread. To look at what our risk would be, we simply take the buy price, 1.5663, and subtract it from the floor, because we can't lose any money below the floor of 1.5650. The difference is 0.0013. We divide that by the tick size of 0.0001, and you know the tick size simply by looking at what is the last digit it moves in, what's the last digit it's quoted in. That gives us 13 ticks times $1 per tick, $13 on one contract equals $13 risk. Since the risk is $13, the margin is only $13 versus putting up several $100s if you were trading spot Forex. In addition, the risk will never increase beyond $13 no matter how far the market moves against you, and you won't be stopped out as you have until expiration. So how much money could you make on a pound-dollar spread? Well, the ceiling minus the bought price. So you go on 5950 is the ceiling, minus the bought price of 5663 gives you 287 pips. Divide that by the tick size, 0.0001, and you get $287, or 287 ticks at $1 per tick is $287 on one contract. That's a $287 profit potential, giving you the profit potential of $287 on a $13 risk. One thing that's really important to know is that you can close the spread at any time between opening and expiration. If you hold it to expiration, it'll automatically settle in cash, and the difference between where you bought and the expiration settlement price will result in your net profit or loss. Your profit will not exceed the amount above the ceiling, and your loss will not exceed the amount below the floor. To calculate the risk on a sold Nadex spread, if you think the pound dollar is going to go down, you simply take the ceiling minus the sold price. So the ceiling 56.50 minus the sold price of 56.36. The difference is 0.0014. Divide that into ticks, 0.0001, and you're going to get 14 ticks at $1 per tick is $14 times one contract of $14 risk. Since the risk is $14, the margin is only $14, and the risk will never increase beyond $14 no matter how far the market moves against you, and you have until expiration to close the trade. Now, for the profit potential, we're simply going to look at the sold price minus the floor. So we go in and we sold it at 56.36, and the floor is 53.50. The difference between those two is 0.0286. We divide that by the tick size of 0.0001, and we get 286 ticks of profit potential. At $1 per tick on one contract, again, that's $286 of profit potential, giving you a profit potential of $286 on a $14 risk. And again, you can close the spread anytime between opening and expiration, and if you hold it to expiration, it'll automatically settle, and the difference between where you sold and the expiration settlement price will result in your net P&L. Or you can close it, and the difference between where you sold and bought back will result in your net P&L, with your loss never exceeding the $14 risk based on these prices, and your profit not exceeding $286, whether it expires above or below the floor or ceiling. Now, Nadex pound-dollar spreads give you a variety of contracts, spread widths, and trading hours. And you can go in and you can trade the 2-hour spreads from 8 to 10, 9 to 11, 10 to 12, 11 to 1, 2 to 12 to 2, 1 to 3, 2 to 4, every hour, 3 to 5, 4 to 6, 5 to 7, 6 to 8, 7 to 9, 8 to 10, 9 to 11, 10 to 12, 11 to 1, 12 to 2, and 1 to 3. There's also 5-hour expirations that you can take advantage of, and there's 8-hour expirations that you can take advantage of. Plus, there's a daily master spread you can take advantage of. Now, on the tiered spreads, the 2-hour, 5-hour, and 8-hour, what they do is, let's say it's 100 pips wide, they'll put it 100 pips above the market, 100 pips below the market, and they'll put one in the middle, straddling the market, 50 pips above and 50 pips below every hour. Nadex pound-dollar binaries allow you to trade the pound-dollar with no complicated FX conversion formulas, with a contract that can be used in both flat and volatile markets, with less money, with limited risk. So your risk will never increase as your margin is your maximum risk, just like on the spreads. Now, there's no fear of being stopped out by a market spike, as you have until expiration of the binary to be correct about price movement and direction, and you have no fear of a margin call. Since your risk is capped, as all your trades risk is fully collateralized, you'll never receive a margin call, and therefore you'll never lose more than what's in your account. You also, again, have no fear of having to deal with carry interest. Now, Nadex binary is basically a true or false statement. You're saying the statement is true if you buy, that the pound-dollar will be greater than 1.5720 at 3 o'clock Eastern Time. You're saying the statement is false if you sell. You're saying the pound-dollar will be less than or equal to 1.5560 at 3 o'clock Eastern Time if you chose those particular strikes. Now, a very important tip. You can close the Nadex binary before expiration, so the statement does not have to be true or false at expiration to potentially profit on a trade. All Nadex binaries have a maximum value of $100 and a minimum value of 0. If the binary is held to expiration, it'll be worth 0 or $100. It must be in the money to be profitable. Well, in the money on a buy means that the Nadex settlement price of the pound-dollar is greater than the strike that you bought at expiration. And in the money sell means the Nadex settlement price for the pound-dollar is less than or equal to the strike that you sold at expiration. To look at an example of buying a binary, if I went in and bought the 1.5720 binary, I'd be saying that statement is true, that it'll be greater than 1.5720 at 3 o'clock. Now, of course, I can close it out before expiration. Right now, the offer is $16.50, so the risk is $16.50. When I buy, the offer side is my risk. My profit potential is the difference between $100 and the offer quote. So $100 minus $16.50 is $83.50 profit potential. The margin to do the trade is $16.50. Now, if I sold the binary, then I'm saying that the statement that the pound dollar will be greater than 1.5560 at 3 p.m. is false. And that's, again, if I held it to expiration. I can close it earlier. Well, the profit potential is the bid quote. When I'm selling, the bid column shows me the profit potential. So a quote of 88.50 means that I could make 88.50 on the trade. My risk is the difference between $100 and 88.50, or $11.50 per contract. The margin to do the trade is only $11.50. Now with Nadex binaries on Forex, you have a variety of strikes you can take advantage of. On pound dollar, there's 9 strikes on the intraday strikes that are only 10 pips wide. On daily, they're 20 pips wide, and on weekly, they're 50 pips wide. The Nadex pound dollar spreads and binaries allow you to trade pound dollar with no complicated FX conversion formulas, with less money, with limited risk, as your risk never increases as your margin is your maximum risk, with no fear of being stopped out by a market spike because you have until expiration of the spread and binary to be correct about price movement and direction. You also have no fear of a margin call since your risk is capped, as all trades risk is fully collateralized. You'll never receive a margin call, and therefore you'll never lose more than what's in your account. And you have no fear of having to deal with carry interest. To open a live or demo account, simply go to nadex.com today. Also visit us over at apexinvesting.com to learn more about how to trade on Nadex.